guys, welcome to this. So if you can hear me, so let's get to name and where you are. Okay, someone is saying communication breaking. Please, can you hear me clearly? Can you hear me clearly? Can you guys hear me clearly? Can you hear me clearly now? Hello guys, can you hear me clearly? Okay, so you guys can hear me clearly now. I can see too many complaints. I hope everything is okay now. Can you guys hear me? Our live trading section again. So I know most of you here joined for my last live trading section where we talked about my strategy to go back to trade. For today we'll still be talking about something different. So like I stated, go ahead, drop your name and where you are joining us from. Okay, so I can see Rose from Nigeria. Most of you are saying. So please, if the video is back, you can let me know. I teach traders how to manage their money and find their trading style. So we'll go right straight to what we have today. So guys, for today we'll be talking about understanding market structure, and so under that we'll get to understand what market structure means today, and different types of market structure, how to read market structure, how to trade market structure in a market, and why market structure is important in trading. Then after that we'll get to know the theoretical aspect of it. Then after that we'll head straight to the chart. Guys. So that's what we'll be talking about today. So if you have any questions, go ahead and drop your questions as the class is going on, so that after the class, once it's time for question and answer section, I will go ahead and look at the chat box and answer your questions. So if you have any question, don't wait till you hear me say go ahead and ask your question. Drop your questions now on the comment box so that once it's time for questions, I can go through the chat box and answer your questions. So as the class is going on, go ahead and drop your questions. Let's head straight into what we have for today. Let's head straight into what we have for today. So from our content, we have what market structure means. So if you look at the chart here, or what we have on the screen, so you will see that market structure refers to the organization. It is a fundamental concept that describes how prices are determined and how different market participants interact with each other. So in Forex trading, market structure is determined by the number and size of market participants, type of trades they make, and the level of competition between them. So once you hear market structure in the market, it just means how the different participants in the market they are behaving. You know, when we talk about Forex trading, it simply means buying and selling of different currencies. Obviously, there are actually participants in the market that are buying and selling different currencies in the market. So those participants in the market, they determine how the market structure will be. So if we have more of buyers, that's when you will hear that, okay, the market is bullish. If we have more of sellers, that's when you will hear that the market is bearish. So those participants in the market determine how market structure is when you're looking at it on the chart. So if you check from what we have here, you can see the different participants we have in the market. We can have retail traders, commercial banks, hedge funds, and so on, so many of them. So these participants in the market, they determine how market structure will be when you are looking at the chart. So heading straight to the next one, we have three different types of market structure, which you are going to understand. Market structure, you get to understand how to trade purely with market structure. So this is me showing you another strategy, just like the last where I talked about SMC. Today I'm talking about market structure. So as a trader, once you get to understand how market structure works, you will finding out trading setups will not be an issue once you get to understand how market structure works. So we have three types of market structure, which is we have the bullish market structure, we have the bearish market structure, and we have the sideways. Answer them. So let's quickly run this through. So let's look at what the bullish market structure means. Let's look at what the bullish market structure means. Now, a bullish structure is defined by a series of higher highs and higher lows. The trend continues in the same direction until asset price records a lower low. So when we are talking about bullish structure, so from the diagram we have on the screen, that's when market will be creating higher highs and higher lows. That's when market is breaking structure to the upside, creating higher highs and higher lows. Then you will know that the market is bullish. So once you look at the chart and you notice that, okay, lows, just know that the market is bullish, and you should be looking out for more buys. So when the market is bullish, it simply means that there are more buyers in the market than sellers. So you should also join them if you want to catch some good trade setup. You should also join them if you want to catch some good trade setup in the market. So that is it for bullish market structure. So let's head straight to the next thing we have. Let's head straight to the next thing we have, which is the bearish market structure. The bearish market structure. So a bearish structure is defined by lower lows and lower highs. Stated for that of the bearish market structure, the bearish market structure gives out lower lows and lower highs. So from the diagram we have on the screen, you can also see how it looks like. So from here, market trends down, gives out a lower high, clears out that the lower low here, then gives out a new lower low, lower high, just like that. So this is for you to understand that market does not move just like a straight line. So you obviously have lower highs. Most of you, if you've been doing your research and if you've been following the classes here, you get to understand that the sideways market structure can also be called a ranging market or a consolidating market. So from what we have on the screen, you can see the horizontal movement of price action by equal highs and equal lows is called a sideways trend, or sometimes referred to as chop or consolidating market. So we handled the first market structure, which is the bullish, and it creates higher highs and higher lows when you see it on the chart. Then the bearish market also creates higher highs and higher lows when you see it. That's the bearish market also creates lower lows, lower highs when you see it on the chart. Then now we are looking at the sideways market structure to also know how they look like in a live chart. The thing we have to talk about today is how to read the market structure. Now you've heard the meaning of market structure and the different types we have. So how do you get to actually know the particular trend in it? So when you are looking at a chart, you get to ask yourself, is there a trend or a range? So how do you get to know the trend? Just like what I've explained. If the market is giving out higher highs, and higher lows, you will get to know that it is a bullish market structure. Then if the market is giving out lower lows, and lower highs, you will get to know that it is a bearish market structure. So once you get to know that, you point out the swing highs and swing lows. You get to point out the swing highs and swing lows. Then understand price patterns that form on the chart, as the market price usually makes some repetitive movements that form patterns. So that is how to read the market structure. So definitely we'll go to the live chart to point out how to read the market structure. So I just want you guys to understand theoretical aspects of it, to get the background knowledge of what market structure means and how to read it, so that when we get to the chart, it will be easier to point out. So let's get to see how to trade market structure. So I can still see complaints from the charts. I can still see complaints from the chat that the video is, but everything is working out fine here from my own end. So hello guys, can you guys hear me now? I try to fix what is actually going on. Hello guys, can you guys hear me now? Okay, so I guess everything is okay now. So sorry for the little glitch that happened. I tried to fix that. Sorry for the little glitch. So let's quickly run down what we have fast, then get straight to the chart. Okay, so like I was saying, today we are talking about market structure. So we've already seen what market structure means, how different market participants in the market react. So how they are reacting on like in the market, shows what the market structure will be. How they're reacting shows the types of market structure. We've talked about the different types of market structure, which is the bullish market structure, the bearish market structure, the sideways market structure, and which we've explained that the bullish market structure gives out higher highs, and higher lows, and the bearish market structure gives out lower lows and lower highs. That's how you get to know what each type of market structure means. Then there is a trend, which direction. Then you point out the swing highs and the swing lows. Understand price patterns that form on the charts, as the market price usually makes some repetitive movements that form patterns. I guess this was where we stopped before the video issue. And so we're talking about how to trade the market structure. So you also get to know the theoretical aspect of it before we head straight to the chart. So when analyzing the market structure, to formulate a trading setup, traders look out for different things considering the trader's strategy. So for example, some traders identify support and resistance levels and trade from these levels. Some traders use trend lines to trade market structure, and some traders also trade breakouts and pullbacks. So now I'm going to explain how different traders trade out from market structure. So once a higher high in a bullish market, once market breaks a higher high, some traders put their pending orders there, and immediately market breaks, their orders will be triggered, and from there they can make some profit. So there are still some traders, once there is a breakout, they will wait for retest. Once there is a breakout, they will wait for a retest, and then they will go ahead and enter a buy from there. So that's how you can trade out of a bullish market structure. If you want to use that of a breakout strategy to trade a bullish market structure, so all you need to do is to place your buy stop on that's above the higher high. So once it taps and triggers your orders, then if you're correct, it will move in your direction. So most traders, once there is a breakout, they also wait for a retest. Once there is a breakout, they also wait for a retest. So once market buy, and from there they can take their buy and make their money. So this is for breakout traders and also for pullbacks traders. So there are still some traders that they make use of trend line to trade market structure. So this is where you obviously know that once market keeps respecting touches the trend line, you can see from here, market touched the trend line, pushed up, giving us higher highs. So some traders will be waiting for a retest on the trend line, and from there they can decide to take their buy setup from that end and make some money from that particular end. So we also have some traders that wait for support and resistance level, just like I pointed out. So this is actually how I trade mine. I wait for once I see higher highs and higher lows. Once I see higher highs and higher lows, I will mark out my support or my demand zone and wait for market to come back to that zone, tap in, and from there we push it all the way up. So this is how you can trade from bullish market structure. This is how you can trade from bullish market structure. So let's also look out for that of bearish market structure. So when we are talking about bearish market structure, it simply means when the market is on a downtrend. So just like I've explained on the bullish market structure, for the bearish, traders will still place their sell stop. For breakout traders, they will place their sell stop, and once market breaks that particular lower high, Once market breaks, some traders will also wait for that of retest. So once there is a retest, some traders can still decide to end that. So this is for breakout traders and pullback traders. So we also have that of trend line. We also have that of trend line. So you can see market will be pushing down, giving out lower lows, giving out that bearish trend momentum, and most traders will wait for market to pull back to retest the trend line for them to take another sell. So considering your own strategy, and most traders will also look out for support and resistance levels where they can take possible setup. So from here we have that of bearish market structure. So we'll be looking out for a sell. So you can see we have lower lows. You point out the we have lower lows, then immediately you point out the resistance level or the supply zone. Wait for market to come back, tap into that zone, then you can trigger your order. So that's how you trade out of bearish market structure. So for that of the sideways market structure, so sideways market structure, just like I stated, is when market is giving out equal highs and equal lows, more like ranging, or so you can decide to buy once market taps into the support level. You can decide to buy, just like you've seen from my different examples. You'll get to know that once you have a good knowledge of the market structure, you can point out the market trend. You can also point out when the market is about to reverse. You can point out continuations, and you can also use that to get potential trade setups. You can use that to get potential trade setups. So guys, we'll be going straight to the chart now to know how you can do your analysis. Let's do the practical aspects of everything I have been explaining here. So let's go to the chart now. Okay guys, I believe you guys can see my chart. So okay, this is the wonderful trade I took today. Actually, it's still running though. So but let's quickly read the market structure of GBP USD. Let's quickly read the market structure of GBP USD to understand what is going on. Or let's just look out for another one, that is for Euro USD. So you can still go ahead and drop in the chat box any particular currency pair you want me to analyze for you. So let's get so just like what we've seen, let's get to understand the market structure of Euro USD. Let's get to understand the market structure of Euro USD. So you can still go ahead and drop any pair you want me to read the market structure. You can still go ahead and drop your pair, maybe your own favorite pair or anyone, so that you can go ahead and read the market. See that the market is what? Bearish. You can see that the market is bearish using my trend line. You can see that the market is bearish. So we are going to point out the lower lows and the lower highs on this particular pair. We are going to point out the lower lows and the lower highs and look out for possible trade setup. So from here, we are going to analyze and read the market structure of Euro USD from this end. From this end. So you can see the market created, there's a higher high here. You can see the market created higher high, so I will just use HH to point it out. Let's put in the practical aspect on the chart. So you can see we have this higher high and markets cleared out we have this higher high, and we also have this swing low here. So you can see where market cleared it out. So you can see higher highs, higher lows. So you can also see another higher high here. So okay, this is we're looking at a bearish market. So what market is actually creating is lower highs and lower lows. So you can see it on the chart here. So you can see once market got here, we got lower high here. So you can see another lower high and another lower low. So this shows that this is a bearish market. You can see another lower high, lower low, lower high, lower low from this point, lower high. So why is it called lower high? So you can see new highs that is lower than the previous high that it created. So that shows the market is actually trending downwards. And then if you are looking out for possible setup, you should be looking to join the sellers, because once the market is bearish, you should be looking to also join the sellers, because it means that there are more sellers in the market than buyers. So you can see we have here lower high, and we have another lower low, lower high, lower low, lower high, lower low. And this is market, this is the present market price. This is where the present market price is, and you can see that the market is trying to create another lower low. So if we are to trade out from this particular, if we are to do our analysis now on Euro USD, if we are to do our analysis on Euro USD, we'll have to mark out this particular zone. So we are expecting market to also come into this particular origin here. We're expecting market to come into this particular origin. Then from there we take a sell following the trend to the downside. So this is how you trade out of market structure. So as a trader, you need to understand what market structure means and how you can read it, because with that you get to understand what the trend is. Because once you are following the trend, the probability of your trades playing out nicely, it's actually higher than when you are going against the trend. But what happens if you don't even know how to read the trend? That simply means you'll just be trading and without following the direction of the market, and that can be very, very detrimental as a trader. So I can see on the chart box, someone said I should go ahead and analyze gold, USD CHF, GBP JPY, and AUD USD. So this is me. So I've actually dropped a signal now on Euro USD. So this is actually a signal on Euro USD. If you can take screenshot of it, you can go ahead and do that now. This is a clean signal on Euro USD. So once market gets into this zone, we'll be looking for market to reject out of this zone. Then we'll keep selling, following the trend as market is creating lower lows and lower highs, lower lows and lower highs, or lower highs and lower lows, whichever way you want to call it. So you can see that's what we have here. So this is a clean signal on Euro USD. So we'll be waiting for this particular setup. Once market taps in, we're selling. So this is actually a live chart. So you can go ahead and screenshot this and also go to your own chart, map it out, and wait for when market will tap into this particular zone. So this is actually from 4 hours time frame. So we'll wait for when market will tap into this particular zone to take our sell from there. So let me go ahead and analyze that of USD CHF. I pray time will allow me analyze all the pairs I'm seeing on the comment box. So let's go ahead and analyze that of USD CHF. The CHF. Okay, So looking at USD CHF, so let me know those that already get looking at it on the chart. What do you think the trend is? So let me get your answers from the comment box. What do you think the trend is from what we are seeing now on the chart? What do you think the trend is? Is it a bullish or a bearish trend? What do you think the trend is now on USD CHF? What do you think the trend is? So let me get your answers from the comment box. Let me know those that are following. Let me know those that are following. So looking at it with this trend line. Okay, good. So I can see your answer. So that simply means you guys are following. So I can see most persons talking about uptrend. Okay, Douglas is saying bearish. Douglas, my dear, it's not bearish, it is bullish. It is a bullish trend, please. So please correct yourself. It is a bullish trend. So looking at USD anything out, you obviously know that the market is creating higher highs and higher lows. So you can see I've mapped out my trend line and it's pushing upwards. So that simply means we are on a bullish trend. So let's get to analyze this chart from here to see if there is a possible trade setup. Let's get to analyze this chart from here. So you can see from here we have this swing low here, and you push it up. You can also see we got this swing low. You can see where it started from. So but I just want us to start analyzing from here. You can see this swing low, higher high. We got this higher high, we got this higher low. Market cleared it. You can see market broke that structure to get this higher high here, and from there kept on pushing up. We got another. You can see this low, it's much more higher than the low we had here. So that's where we're getting the higher, this low, which is a new higher low here. So if I'm to use this, you can see how market moves. That's why I said market does not move like on a straight line. You can see it pushes up, we'll get retracements, it will push up again, just like that, push up. So let's just draw this like this, push up. You can see a retracement, push up, a retracement, it will push up again. So that's how you get to understand market structure. So from USD JPY, USD CHF, so you can see that market is respecting this low here. Okay, so we can actually see that that's the present market price. That's where market is now. So let's take this one out. So we are expecting something like this too. Market is presently respecting this low. So this is another trade setup we are also seeing here. So market is presently respecting this low, coming closer to that particular low. So if we are to wait for a particular setup, it's a bullish trend, so we are looking out for a buy. So once market taps into this particular zone, we should be looking out for a buy. So it's just that simple. Once you are reading the market structure, you will just see everything playing out, because market structure tells you the story that is going on the chart. It tells you the story that is going on the chart, so that you get to know how to join. Because if you just open the chart and you will just start trading immediately, you may go ahead to do the wrong thing. But once you get to understand how to read the market structure, you will get to understand the story and know how to join the market. So you can see from here, this is another probable setup on USD CHF. This is another probable setup on USD CHF. So because of our time, I'll quickly go ahead and analyze that of gold, and I'll go ahead and answer some of the questions. let's get that of gold. Okay, what do you think the trend is? So I'll just count 1, 2, and 3. Let's get to know those that are on the same page with me. What do you think the trend is? So we'll be analyzing from here. So what do you think the trend for gold is? What do you think the trend for gold is? So gold is actually on a bearish trend. Gold is on a bearish trend. So you can see we have this lower high here, lower low, lower high, lower low, lower high, and lower low. So you can see where market is actually consolidating on there. So you can see where market is actually consolidating on. So gold is actually on a bearish trend. Gold is actually on a bearish trend. So that simply means there are more sellers in the gold market. So if we are to look out for a possible setup, we'll be looking out for market to more like give us a little retracement, then we'll sell again. So we can wait for the retracement to come and test this particular resistance level, following what I just told you guys. So you can also decide to catch the retracement. Then once market taps into this zone, you can go ahead and still sell gold. You can go ahead and still sell gold immediately. So that's how it is. So gold is on a bearish trend, and this is also another probable setup on gold. So following that the trend is bearish, we can be looking out for more of sell setup, and this is where we can decide to sell gold. So if we get a retracement to this point, we can decide to sell gold, and we can also catch the retracement maybe from the lower time frame if we get any sign of reversal from there. If we get any sign of reversal, although it's rejecting already. So if I'm to catch the reversal from this point now, if I'm to catch the reversal, I should be expecting more like a push up that will clear out this consolidation here, a push up, then a slight retracement down, then I will take it up to this point, take my profit here and sell again. So it's actually that simple, guys. It's actually very, very simple. So this is how you get to read the market structure. When you are looking at the chart, this is how you get to read the market structure when you are looking at the chart, and also point out some probable trade setup. So as a trader, once you get to know how to read the market structure, getting trade setups and actually making your profit from the market will be very easy for you once you get to know the market structure as a trader. Okay guys, let's do a quick recap. Let's get to know those that has been following me. Let's get to know those that are following. So let's do a quick question and answer session. So I'll be throwing in the questions, and this is my own time to ask my own question. So if you answer me, I'll answer you too. So how many types of market structure do we have? How many types of market structure did I list here? And that is for number one. How many types of market structure did I list here? So you can also go ahead and drop that. This is we're doing a quick recap now. Let's get to know those that have been following me from the very beginning till now. So how many types of market structure do we have? Then a market structure with defined higher highs and higher lows is called what? So let's get to know. Okay, Douglas has already said 3. That's beautiful. So let's get to know those that have been following. So as I'm waiting for your answers, let me quickly go through the comment box and still see some of the questions you have and go ahead and answer your question. Okay, we have a question on the comment box from Daniel SN. He said, if market breaks 2 structure and leaves 2 other blocks and 2 imbalance, other block will be valid. Okay, so I guess this question is the SMC angle. So I guess you trade SMC as your strategy. So if market breaks two structures and two imbalance, and if market return, which other block? You said if market breaks two structure and leaves two other blocks and two imbalance, if market returns, which other block will be valid? So if you were actually here in our last class, I talked about premium levels and discount levels. So you need to trade out of the other block that is on the premium level. So this may be sounding strange for the strategy work. So just check some of the videos here. You will see my last live trading section. That was where I talked about SMC strategy. Okay. Yeah, 3 types. So you can see the questions we have. I'm waiting for your answers as I am also answering your own questions here. Okay. So we have another question from Douglas. I'm a first timer. I haven't traded before. I really do not have an idea of what trading is all about. Please, I need to know the basics. Okay, Douglas, just go ahead after this class, because I guess there are a lot of educational videos here that's in this YouTube channel. So go ahead, just go down. You will get to know where to start from. You'll get to know where to get the videos talking about the basics of forex trading and so on. So there are a lot of videos here that will actually educate you on that, ranging from that of the beginners video to where we are now. It may not just be from me alone. You can still see from other traders dishing out some educational content here. So just go ahead and look through to get particular videos. It means you guys have been following. That's beautiful. That simply means you guys have been following. So from here you can see some more like a recap. So I mentioned 3 types of market structure, which is actually bullish market structure, bearish market structure, and the sideways market structure. I also explained this. That's a market structure with defined lower lows and lower highs is called a bearish market structure. So I just pointed it out on the chart. Once it's giving out lower lows, lower highs, lower lows, lower highs, just like that, it means that it is a bearish market structure. Also, a market structure with equal highs and equal lows is what we call a sideways market structure. So it's giving equal highs and equal lows. So market moves from one zone to another, one resistance level to support level, resistance level, to have an equal direction. That's when we have a sideways market. And whenever market is actually sideways, some traders may decide to trade out of those zones, and some traders may decide to stay off, depending on your own strategy. So I can see your answers. That simply means you guys have been following. That is beautiful. So you can still go ahead. Once if I end this live section, you can still go ahead and go back to the videos. For those that just joined late, if you're just joining now, you can still go ahead and watch this video again to understand everything I'm talking about. So once you watch this video again, because if you want to understand trading, you need to keep teaching yourself. So go ahead, watch this video and get to understand how market structure works. So you understanding market structure as a trader gives you that peace. So it will not be difficult for you to become profitable in the market. So once you understand how to read the chart. So for the last one, a market structure with defined higher highs and higher lows is called what? So it's actually called a bullish market. So I can see most of you are getting the answers in the comment box. So that's beautiful. That simply means you guys have been following. So thank you for joining me for today's class. And so the network issue that happened earlier, that's the glitch and everything. So we'll be having another live trading section on the 12th of this month. So I guess that should be next week or upper. So by then I'll still bring another wonderful stuff we can talk about. So sorry for the glitches today. I promise it won't happen in our next live trading section. If you actually gain something in this class, go ahead and drop some fire emojis for me. Go ahead and drop some fire emojis for me before we go ahead and end this class. So if you gain something from this class, and if structure and you understand how market structure works, go ahead and drop some fire emojis for me. Go ahead and drop some fire emojis, guys. So let me see those fire emojis. So thank you for joining, guys. Go ahead and drop some fire emojis if you gain something from this class. So if you also check the comment box, you will see the Telegram link for Octa. So you can go ahead and join the Telegram group. There you will get to see some market analysis that will also help you in your trading decisions. So you get to see some market analysis there. So go ahead, join the Telegram group there, where setups drop. So guys, if you're not there, the link is actually in the comment box there. So go ahead and join the Octa Telegram group. So guys, thank you once again. I can see the fire emojis. Thank you for that. So that simply means you guys gained something. Thank you, and see you guys on the 12th of October. That should be next week. See you guys again. So I will bring another wonderful topic.